It's happening to technology stocks. It's happening to everything. It's happening to commodities. So everything is in this very cyclical world. So it's something we have to get used to. But I think the cyclicality over time becomes less. So each drawdown in crypto, the overall market falls less. And you can use Bitcoin as the best example. Each time it just falls a little bit less. So maybe next time around it falls 60% and not 75%. And previous time was 87%. The previous time to that was 97%. ETH fell in 2018, 97%. This time it fell 85%. Maybe next time it's 75%.
Raoul Pal, a polymath in his own right, dons many hats. Entrepreneur, crypto enthusiast, investment strategist, economic historian, writer, and an avid traveler. But Raoul Pal's digital presence is a testament to his unwavering dedication to providing forthright investment advice and uncannily accurate forecasts on the global economic and financial landscape. He is not merely a commentator, but a mentor, a guiding light, and a source of inspiration for those navigating the intricate world of finance. As the CEO and co-founder of Real Vision Finance and the visionary behind the Global Macro Investor, Raoul's unique perspective offers invaluable insights into the current market trends. Raoul Pal's insights shed light on the fascinating interplay between institutional money, venture capital, and exchange-traded funds, or ETFs, in the world of cryptocurrency. Today, we're going to take a closer look at a recent interview with Raoul Pal. In this insightful conversation, he discussed some of the most pressing topics in the world of finance, from the influx of institutional money into cryptocurrencies to the impact of ETFs and the ongoing economic slowdown. Buckle up. This is a conversation you don't want to miss. Where is the crypto market headed?
Well, it's a complicated world because the actual economy's slowing down, and it's going to be relatively slow for this quarter and next quarter. But the markets priced this in last year, which people can't get their heads around. They're like, we want our recession and we want our crash. It doesn't really work that way because we had it last year. In crypto markets, we were down 80% last year. People have kind of forgotten that. So what the markets are doing is forward-looking. So they're looking forward at where the forward-looking indicators. Crypto spring obviously comes after winter. And it's after all the terrible news comes out. And if you think of spring in terms of weather, one day it can snow, then it can rain, then it could be sunny, then it could be warm, then it could be cold again. It's kind of a weird time. But over spring, generally the weather gets better. And that's what we see in crypto. So you get still bad news stories, but the market doesn't trade as badly around them. It tends to go up over time, but it's a bit frustrating because it trades sideways for long periods of time, and then suddenly it goes up in 2 days and then goes sideways and then corrects again, that kind of thing. And that's the environment we've been in. But if you actually step away, if I look at my screen now, Bitcoin's up 72%, ETH's up 45%, and Solana's up 140%. So actually, it's been a good year, just hasn't felt that way yet.
Effects of ETFs on crypto market.
Well, it depends how they're going to use it. So they can be investors in it, which is great because if you think of crypto as an economy, it needs money coming into the economy, right? Because it can't just be us retail lot because we've all got our money in the economy. It needs to get new money. So that's why it's part of this global liquidity cycle. So when people get liquidity, they start investing in riskier assets like crypto, and it starts flowing in. So that adds liquidity to the market overall, which means that new projects get more traction and it filters through the whole ecosystem. So money, like in any economy, this digital economy needs capital coming in. So that's what the institutions bring, but the institutions are also building on top of this. Everybody from Fidelity to Franklin Templeton to, I think it's Apollo. Somebody else announced today that I think it's UBS are building a mutual fund on Ethereum, tokenizing it. So what they're going to bring is use cases. And the finance system is the largest use case of all because it's vast. So that's another thing. Also, the institutions tend to invest in VC, so they're funding the new wave of projects. So if we think about it, about 62 billion went into VC investments in 2020 and 2021 and 2022 or 2020, 2021. That money got put to work by thousands of entrepreneurs who are building new applications, new opportunities. And that's what the space needs as well, because we've got this great technology, but technology is not enough. It needs to get to user level. What applications can we use where we don't even see that we're using crypto? So that's why institutions are really important. Also, it's important because things like ETFs allow investment advisors to allocate people's money. So it's not just like Goldman Sachs putting money in, it's actually all of our money, our savings and investments and that kind of thing. So it allows people to participate in this in ways that they couldn't participate before, because it was harder for them via investment advisors or financial advisors to actually access tokens. But this, when it's an ETF, they've turned it into an equity essentially.
Ethereum ETFs.
ETF has less impact on the ecosystem than actual spot Ethereum ETF. So therefore, we just want to give something back to the spot market, because don't forget, if people are actually buying Ethereum and they were staking it and doing all of this stuff in spot, you've got a much more impact in the space. Because futures, yes, the arbitrageurs will try and keep the price in line. So it does create demand for actual Ethereum, but not necessarily as much demand because people can just trade the futures themselves. So I think the VanEck team are really trying to do the right thing. And listen, it's bigger than all of us, and we need to allow others to participate and help shape it. If people want their bags to go up, well, they want the institutions to build in this space too. You know, if you want Ethereum to be worth $5 trillion, well, then you're going to need the finance system to use Ethereum for settlements and smart contracts and everything else to get there. So yeah, it's a good thing.
Spot Bitcoin ETFs.
From what I understand, they're not getting rejected for no reason. They're actually getting rejected because I think it's either the CME or the CFTC needs to have some component part, and that part needs to be approved and finalized. And it's actually just that. So it's not like, oh, Gary's trying to slow the whole thing down. It's actually one of the component parts of all of these ETFs that require the kind of validation. I think it's from the CME or the CFTC. I'm not sure which one. Probably the CME. That bit needs to come into place. So they're just buying time to get that done. So I still think it happens this year. It depends what price is doing, because had we launched a spot ETF in November last year, nobody would have bought it because the market was going down or it was feeling terrible. But as the market is recovering and we're in spring, and normally the Q4 is a strong quarter, if you introduce spot Bitcoin and spot ETH ETFs into a rising market, you will start to suck in the investment advisors, the individuals who found it too complicated to hold their own wallets and do all of that kind of stuff. So it really depends what the market is doing, but I think on balance it's positive, but really it'll show up in 2024, 2025 when the cycle's fully underway. It just makes an easy way for people who are not used to the digital side of things to just use equities and get their exposure. So yeah, look, overall longer term, it's very positive. It's just yet another on-ramp. Short term, depends what the price is doing. Price is strong, we'll get a bit of a panic in from the investment advisors and stuff like that.
What to expect from the next market cycle?
Layer 2s, look, Layer 2s are cheaper, faster. So that works. So, you know, Polygon, Arbitrum, all of that stuff, that probably works very well. And so I think we will see ongoing adoption of those. Only some of the value accrues to ETH because they batch transactions. So they take a whole bunch and then it goes onto the ETH chain. So you're using kind of one ETH slot for a lot of other slots. So it has an impact on ETH. It's good. More people are building on ETH. So that's great. I think that continues. Solana, I think, is going to be the big story of this cycle of the main chains because they're launching Fire Dancer or Jump-Is, which is a different validator, which actually, I mean, believe it or not, is going to run at 600,000 to 1.2 million TPS. So this is the fastest thing by a long way. Considering Solana and Polygon are the two fastest chains at 65,000 TPS, and Sui should be about 120,000, but yet to get there. This is just a different order of magnitude. This is 10x the fastest ever thing we've ever seen. And it's not a layer 2, it's just Solana. So this is a game changer. It means the whole finance system can be built on it. It was designed by Jump Trading, who are high frequency traders who understand the latency and sheer capacity requirements for things like exchanges to run. So I think Solana is a very big story. We're seeing a lot of activity there. Then I don't know what the new Solana will be, but we're seeing a lot of interest both in gaming. Oh, I've got my reactions coming up for some reason. Both in gaming and also in zero knowledge stuff. And there's also DeFi. So I don't know. It becomes really hard to know which is the big area. But those are the three I hear a lot. But I tend not to go that far out the risk curve just because it's difficult to choose the right thing, But, you figure that if the space is going up, then Bitcoin and ETH will do well and Solana will do well. Solana's got this extra kicker, which is, I think, potentially a game changer. So I think that's probably the layer one that does, the big layer one that does the best in the cycle. Then we've got the kind of Aptos and Suis and those kind of things. Let's see how they do, what traction they get. The layer twos will be interesting, and then these other kind of applications, as I said.
Are we still in recession?
Ask anybody who's not laid off people from their business, who's not seen a decline in sales, who's not seen a decline in activity. I mean, literally everybody has. Now, it's not just crypto, it's across the board. So I think we have been in recession, and maybe that comes up in the numbers in this quarter and next quarter, because all my forward-looking indicators, which precede that, always showed that we were in recession. So I think the numbers will show recession, but the markets will be trading recovery. It really depends how long this cycle can go on for. The 90 cycle was long. It was 1990 till 2001. It was 11 years. Right now, all of the cycles are about 4 years. So it's hard to build up the imbalances, because if we didn't have a down cycle, okay, crypto would have been in a huge bubble. So it really depends whether these cycles repeat themselves. And I think it's based on the refinancing of the government debts, which are all around 3 to 5 years. And so you get this 4-year cycle all the time. So yes, we will definitely see something that goes into a bubble, and whether it's AI or whatever it may be, who the hell knows? And then as liquidity comes out, it'll get deflated. But again, the key point that people have got to understand is these are not mean reverting. We know this from crypto. The actual trend is up, and all you're doing is going up and down within the bigger trend, which is why you always have to use log charts for this stuff to truly understand what's going on. Because people think, oh, crypto collapsed, it's down 80%, it's back to where it was. Well, it's not. It's back to the highs of the previous cycle. It's like you have to keep it in your head where that actually, all the lows are higher and the highs are higher over time.
Beware, new investors.
The biggest problem new investors face is themselves.
Okay.
Right? It's like FOMO and excessive narratives, excessive tribalism are all the things that will get you into trouble. You need to always step back, understand what risks you're taking, why you're taking those risks, and try and fight the FOMO. Have a plan and try and stick to that plan. Yes, you can adapt it. And then be careful where you get your information from. There's a lot of trusted people in the space, but there's a lot of people that seem alluring because they want to tell you you're going to get rich. Now, yes, there's plenty of opportunity to make money in all of this, but just choose trusted sources. Be careful who you follow, and don't become trapped in one narrative. Things change. This is technology. It's market, so be adaptable.
In a world where financial landscapes shift like the sands of time, voices like Raoul Pal's resonate as guides through the complexities of the market. His insights into the crypto market paint a vivid picture of the financial landscape's ever-evolving nature. The crypto market is undergoing a transformative phase. The influence of institutional money, the role of venture capital, and the rise of ETFs are reshaping this landscape. With an economic slowdown being factored in, the crypto market appears to be on an upward trajectory. Yes, understanding the technology, market trends, and various projects is vital. Remember, while the crypto market can be highly rewarding, it's also incredibly volatile. It's crucial to approach it with caution, do your research, and invest only what you can afford to lose. Raoul Pal's wisdom remains a lighthouse for those navigating the uncertain waters of the global economy. Until next time, stay curious, stay informed, and stay ahead in the world of finance.